All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin. All right, so earlier today when I made my video, we were pumping up to the top here. We just started the dump here, and we were looking at this as a possible five-wave impulse. But remember, we talked about, actually, I think I did talk about this in the video because it happened during the video. We dropped past our wave one of the impulse, and really that invalidates this being a wave three here. So we saw that that dropped below it, making this more probable to be an ABC correction, like an ABC correction with our C wave. Oftentimes in an ABC correction, your C wave does have the most volume and it ends in a high volume amount. And if we go into our volume here, we can see it ended in high volume here, and then we dumped. Now, guys, this is very important here. We did front run our golden pocket again, and this is getting a little bit scary. For some reason, we do not want to drop to this golden pocket, but what this tells me is that we might bust through it next time we come down. I will show you an example of when this just happened just recently, about a week ago. But let me show you first. This was our lows from yesterday. Came down, SFP'd our lows, and we SFP'd our lows into the value area low. So if you look at this after this impulse finished here to the downside and you pull a volume profile from this candle here after the impulse ended sideways, you can see our value area low is kind of where we ended that. And we had the SFP. We just dropped a little bit below the value area low to SFP, and then we started pumping. And I want to show you guys this pump. I was not convinced at all about this little bounce that we saw here, because if we, once again, let's look at the volume on this bounce. Let's turn on our volume and let's go into our volume. You can see a strong red candle to the downside, high volume red candle to the downside. That means it's a more healthy push to the downside. It is giving us strength on this push to the downside. And look at this bounce so far. This bounce is just so gosh darn weak right here. Volume decreasing the entire bounce up. Now we are attempting to make a higher low right now, and where we are attempting to make a higher low, let me turn off this volume, get it out of the way. If we can also do another range pull, so there's a volume profile pull. There's two volume profiles I'm following. The one that I just showed you here of the bigger range, and then remember how I showed this in earlier's video. We had this A, B, C correction to the downside, and we completed that correction. We hit our 1-to-1 fib extinction target. And I showed you guys that in earlier today's video. So just check that out. Since we completed this ABC correction, you can see here we've been going sideways. So we can pull a volume profile of our sideways range, starting on this green candle here, pulling it present day. And we were trying to hold this value area low. Looks like we're starting to break it now. But this bounce was so weak. You could tell this bounce was weak by the volume here. And I was not convinced at all that the low was in. Another thing I want to show you guys, we did form a new channel with today's high. So in the old channel that I had on the chart, let me go ahead and hide this channel real quick. And we had this channel from the weekly rejection highs at 1025 to this lower high of the B wave down to our C wave low. And we were following this channel. We broke out Friday morning, or we bounced from the midline Thursday, broke out on Friday, had a fake breakout, and then dropped back into it. And then we even front run the golden pocket again, broke out of it. And you can see on this candle here, when we broke out of the channel, it was with some volume, so it was a little bit healthy. We made new highs on that breakout here, and now we're dropping. Now this channel is no longer as relevant. Actually, I deleted it from the chart. I'm not following that channel anymore. But we do have this new channel now. So let me turn that on and let's get rid of that. Now this new channel is based from the 1025 weekly rejection to the new high that we made today, and bring it down to that same low, the end of the ABC correction. And look how nice this channel is. Rejection from midline, bounce from midline once we reclaimed it, rejection from midline after we lost it, rejection from midline, bounce from midline right here. It wasn't a big bounce, but we bounced. Rejected from midline here, bounce from midline here, bounce from midline here, then rejected. So we do have, this channel is being respected. And guys, at the bottom of the channel, we have the SFP of these key lows into our 786 at the bottom of the channel, not our golden pocket and naked daily point of control anymore. And this could get flushed right through. So right now I'm going to show you an example of when we saw a front run of a golden pocket and then we flushed right through it. So let me zoom out here onto the 4-hour chart. And this example was from about a week ago. Remember that DeepSeek crash that we had, and we came down. Now on Coinbase, we did hit the point of control, but let's go to the Bybit chart here, because Bybit did front run that golden pocket and it front ran its point of control here. So if we take that golden pocket pull from the 89K lows to our new all-time high, we were waiting and this was everyone I knew, every good trader I knew had a box of support here and was really looking for longs in this area here. And when we came down on the DeepSeek crash, we barely front run it. And then we got a push, a weak push up. It was an ABC correction to the upside, small ABC correction to the upside here. You know, we had our 1, 2 zigzag correction to the upside here. And then when we came down to it, the next time we came down to it, we were all still looking over the weekend. That was last weekend. We were all still looking for this to hold because we front ran it. So we were looking for the SFP into this support level. Well, guess what happened? Because we front runned it right here, we just busted straight through it. And that is a possibility of what could happen right now with this golden pocket. We have front run it now twice. We front runned it yesterday here, and we got that smaller ABC correction to the upside. Let's go here on the 1-hour chart. Front run it here, smaller zigzag correction to the upside, dumped. Now we're coming back down to it again. We front runned it again though. Also earlier today, front runned it again. We did SFP these lows. That's why we saw that little bit of a bounce there, but we did not hit into the golden pocket. And so now, because of this front run 2 times of the golden pocket, next time we come down here, we might bust straight through it and come all the way down to our bottom of our channel and our 786 area. Down here. And let's turn that channel back on. Down here. So I'm just more wary of longing this golden pocket now because of the double front run we saw of it. There is, I will still attempt to long this golden pocket if we see certain confirmations. So like on the 1 hour and under, we're going to want to be looking for bull divs. So as we're making new lows into the golden pocket, we'd want to see lower lows on the price action, and we would want to see higher lows on the momentum waves. So let me go into here, and we'd want to be seeing higher lows into the momentum waves. Now, right now, Market Cipher B is possibly setting up for that. If we do a quick dump right now here, and then we do something like this and round it off, that would be a 15-minute bull div. I would be willing to take that long, at least there, if we did see that. Also, guys, now I am not looking so much for the 618 of the golden pocket here towards the top of the green box. I am now looking more at the bottom of the naked daily point of control at 95.2 to our 0.65 right below it. So, I really want to see us bust through most of the green box support down to the naked and actually hit the naked daily point of control within the golden pocket to see a true bounce. And so if we do that, if we come down here, we hit into here like this with bull divs, I will look at taking a long here. But I just want to warn about this. There is a possibility that we could flush straight through this and come down to the bottom of the channel in the SFP into our 786. All right, so now also another possibility we could see is we could just continue the range that we're starting to see now, this more sideways range since we finished our ABC correction. This area here from this candle here, this is kind of our range, that our sideways range that we're seeing now. So we could over the weekend just could continue to range sideways all weekend. It is weekend price action. And now that it is weekend price action, even if we hit into this golden pocket and bounce now, like say tonight or tomorrow, it is a weekend low, and weekend lows oftentimes get taken out the next week because the big guys couldn't get in that don't trade on the weekends. And so that is a possibility as well. We also have to take into context the much larger time frames. You guys, on the daily time frame, look at this money flow. This money flow looks like garbage right now. It's been coming out the entire range. We topped out around the top of the range or around this 108K high. And ever since then, we've been ranging sideways on Bitcoin, but our money flow has been decreasing, and we have 3 drives of bearish div, or double drives of bearish div, 3 humps of bearish div. Also, look at our daily time frame. It looks like our butt cheek is starting to blow out and not curving over. So we could see a much bigger, what we call a butt cheek blowout, or a momentum oscillator blowout, where this blows out and takes a while longer, and this flushes way down here and does something like this. That is a possibility. Also, weekly time frame, bear divs on the weekly time frame. Not only regional weekly bear divs, but daily, local bear divs as well. So if we come here and we look at this high that we made at 74K, you can see our momentum wave is higher than our high that we made at 108K. So there's one drive of bear divs on the weekly right there. But also, if we zoom in here, you can see we kind of formed a second hump within this little second hump here. We made a new all-time high from 108 to 109K, and this is showing a local bearish div. So we have regional weekly bearish divs from this to here, from this to here, and then local bearish divs here on the weekly. It just looks like we could see a bigger drop to the downside. I don't want to lose this range, and I still do have hope that our 85K could bounce us if we do come down to our 85K. But we just need to be aware that we could be dropping farther and breaking all of this. Okay, let's go back to the 15-minute chart. Let's do this here. And yeah, so that's pretty much it, guys. That's all I'm trading right now. I'm looking at this right now, just these 2 volume profile pulls. So the volume profile pull after the ABC correction ended and this sideways price action, and then the volume profile pull of right after the big impulse ended, after this big impulse ended, and you can pull your volume profile sideways and look at that volume profile, because that volume profile is a very, very valid profile. What did I just do? If we do that volume profile pull from this candle on, you can see that this volume profile pull is an important rejected from value area high on the high today. Lost the point of control into our midline, back tested the point of control, rejected hard down to our value area low. And so this area, this volume profile, right now, if we are just going to be very slow, boring grind over the weekend, we can look for our golden pocket here, and it's really our 786. Our 786 at the value area low locally might hold us again, and we might just continue to stay within this range over the weekend. I really want to see us come down to hit this thing finally, but now I am concerned with the double front runs that we've had of it. I'm concerned of busting straight through it. And the higher time frame bear divs in perspective there. Okay, so now let me go here onto the Coinbase chart. Let's go to our Coinbase chart. Oh, we are on the Coinbase chart, duh. All right, and let's go, let's see. I don't want to remove them. I just want to hide them all. I'll go on a different chart here. I want to show you guys something, though. So let's go on to, yeah, we'll use this Binance chart here, and let's go on to the weekly time frame. And I'm going to hide this pitchfork that we were seeing. And let's look at this here. So let me go ahead and hide this anchored VWAP from the bear market lows, and let me hide this volume profile here. All right, this is the weekly log chart. This is the log chart. So I've shown this in the past, and I was talking about this a couple months ago, right when I first started making my channel. But if we take the 2 highs, the 65K high, the 69K high, as pivot points for a channel, and then we bring them down to our bear market lows. I mean, look how nice this weekly channel has been respected. I did say this months ago. You can see midline respected here, 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 lost it, back tested here, pumped up through it, back tested it here, saw our pump up to new all-time highs. We have been ranging right around the top of this weekly channel here, and I did say this weeks ago, months ago, really, 2 months ago, back in November. I was saying there was a possibility that we could start to form a distribution pattern up here that takes a few months to play out before breaking back into it. Well, guys, I mean, it's looking more and more likely with each day that passes, with our weekly bear divs, with our daily bear divs it's looking more and more likely that we might see that drop to 70K. Now, remember, 70K is a very, very important support resistance flip. First of all, because it is our really like right here, it's our highs that we saw here. And let's bring this to here. So high resistance, 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 resistance all through here. Now, if we drop back down to this area, it could act as support, but we also have that golden pocket down here. If we take the golden pocket from the 49K lows up to our new all-time high, and we look at the golden pocket, our golden pocket is right around this support resistance flip in here. And so this tells me that we could see a drop down to our golden pocket. And guess what, guys? Even if we drop, if this is the start of a bear market, which I'm not saying it is yet, I am not saying it is yet, but we also are confirming monthly bear divs, which anytime you see monthly bear divs start to play out, I mean, you know, look at monthly bear divs here on our last cycle highs, 65K, 69K bear div here. We dropped way far, all the way down to 15K. Now, I'm not saying we're going to get a drop that aggressive, but we are seeing monthly bear divs here at the top of a major trend line log channel here. So we might drop all the way to the midline. And the midline, where's the midline out? It would be an SFP of 50K, right around that 49K lows here. We could drop all the way to our channel midline and SFP the lows here. Now, also, let me zoom back into the weekly chart, and I've covered this in the past few videos. We do have our possible 5-wave impulse of the cycle maybe finishing. Let's go to this one. So our wave 1 from the bear market lows to our wave 2 up here. Our wave 3 was a complex flat correction there. Wave 3 was the BlackRock pump listing, and then filing, then listing pump. Wave 4 was down here, and then wave 3 has been the Trump pump, I guess you could call it. That could be the end of our 5-wave impulse. What do you see at the end of a 5-wave impulse? You usually see a correction. Most common correction, ABC correction to the downside. We could see our A wave drop us all the way to 70K. Then we could come back test, bearishly back test this channel here, and then drop in our C wave all the way down to 50K. This is a possibility we really need to watch for over the next few months to a year, really, in Bitcoin. I don't want to say this. I don't want it to happen. Let me say that. But we, as traders, we keep our bias and we keep our emotions out of trading, and we follow what the charts are telling us. Higher time frame charts are telling us this is probable. Not likely, but probable. I should say a possibility, I should say. And I would put the possibility at greater than 35%, maybe a 60-40 possibility. 60% it doesn't happen, 40% it does happen. So I hate to say that, but this could be the end in a bigger correction in sight here. Now, I know I'm talking more macro and I'm talking a little bit bearish here, but I just wanted to highlight this here. We still, right now, until we lose our range lows at 85K, we're good, guys. We're still trading a range. We could, this, instead of this being a distribution range, this could be a reaccumulation range. Just like here, we thought this range was a distribution range for a little bit of the range. Towards the end, we started figuring out it was reaccumulation based off of the spot ETFs buying, you know, anytime we get to the value area low of the range. But right now, here, we could be seeing a distribution pattern or a reaccumulation pattern. And what those are, for people that don't understand that, like a distribution pattern, let me actually go in onto the 3-day chart here, and let's go to our last cycle here. And you saw we had this big drop to the downside, and then in this area over the summer, it took like 3 or 4 months here, but over the summer we were kind of forming this range down here, this pattern. Well, this was an accumulation range. So after you saw your distribution up here, you know, your first high, your second high in a Wyckoff distribution is always higher than the first high. And then in a Model 2, you have a lower high for your third high. That's almost your head and shoulders pattern or a Wyckoff distribution pattern. And then you dump hard. Then you start to form an accumulation range towards the lows here. You form it for a few months, let everyone else is terrified of crypto and selling their crypto down here. while smart money keeps buying anytime they sell. You see these wicks towards the bottom here, all these wicks towards the bottom anytime. Let me get rid of this so you can see it clearer. No, yes, remove them. Okay, and you can see here anytime we get towards the bottom here, we see wick after wick after wick after wick after wick. We finally have one more flush down, and then we get our pump. So anytime you see multiples of wicks like this after a dump, this is an accumulation range. Smart money is accumulating Bitcoin while retail's probably panic selling after the distribution pattern, and then we pump and make a new bull cycle here. Now, this actually looks like it was an ABC flat here. This almost looks like a corrective wave, an A wave, our B wave, our C wave, and the C wave in an ABC flat usually comes and takes the highs here and then dumps, and that kind of looks like what happened. Your C wave corrective targets, actually, let's look here. If we pull from our A wave to our B wave to our C wave, and usually your corrective targets in a flat are like a 0.9 to a 1.236, anywhere in there. But we did take these highs here, so it was a flat wave correction. And we didn't, looks like we did front run that 1-to-1 there. But let's see, let's turn that off a log. So actually we did hit into our 1.236, perfect, if you take it off log scale. So that makes sense there. So yeah, we saw our ABC correction target be hit. Let's bring it over. Perfectly hit our 1.236 correction target and then dumped. So that is using Elliott waves and understanding what corrective price action versus impulsive price action is, and then we dump. But what I'm trying to say is this was an accumulation range. Well, this being a distribution range up here, we could be seeing something very, very similar. And now this distribution range could also take much longer, by the way. It is getting to about the length of our distribution range on the last cycle highs, but we could still go for another month or two. And you know that saying, sell in May and walk away. Maybe we see something like that. But anyways, this looks like now, one thing I do want to say about this range, wick towards the bottom, 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 wick towards the bottom. This could give us a hint that this, instead of being a distribution range, it could be a reaccumulation range. And a reaccumulation range is different from an accumulation range. An accumulation range happens at the bottom of a dump. A reaccumulation range is something like this here, where you pump into it, you range for a long time, you are reaccumulating while some people are selling near the highs because they're taking profits, which is healthy and which they should do. But smart money is saying, nope, this ain't over yet. I'm buying more anytime we get to the lows down here. And then it's a reaccumulation and you get another pump to the upside. Well, guys, we've already had one reaccumulation within this bull cycle here. I don't know if we're going to see another reaccumulation here, but it is a possibility. And then we could pump up one more time, 128K, something like that. So I just wanted to point this out. Higher time frame analysis here. This could be a distribution pattern. Now, if this is a distribution pattern, we still expect really one more, either if it's a Model 1 distribution, a Model 1, you have your first high here, came down. Our second high was higher than our first high, so that's our second high. In a Model 1 distribution, you actually come up and take the highs for a third time, almost like an SFP of the all-time high, or you can get a little bit higher and then you dump. That's a Model 1. Now a Model 2, you come up high, second high is higher high, your third high is a lower high, making that infamous topping head and shoulders pattern, and then you dump. So this could be starting to be a distribution pattern up here. We just need to be aware of that. Let's go into, actually, let me go ahead and zoom back out. I'll keep it on this. Let me keep it on this three-day chart here, but let me go into, let me delete that there. Let me log this again. And we are going to look at, now I'm going to get rid of this weekly channel that I just showed here. And I'm going to look at something else real quick. So those of you that watch this video, even though it's on the weekend, will benefit from this a lot. That some people that might not watch this. So I'm going to look at this entire trend we've been in for the entire bull market based off of a channel down here. And it's the fib channel that I've been showing for months and months and months in the Discord. And ever since I started my video, I've been showing this channel. I've been trading this trend the entire bull market. So that's how I know. And the other day when we dumped, last weekend when we dumped, I did show how we came down to touch the bottom to back test the channel, the main channel here, the main pink channel. And this here, we could top out in our Model 1. Now, this is kind of far for a Model 1 distribution, but if we did like our one wave, our two wave here, if our third wave came up to hit the 1.618, and then we could crash to our 70K area, that could be our Model 1 distribution pattern. So I just want you guys to be aware that that's a possibility. We could make one more high. Everyone says, oh my God, bull market's back on 250K, 500K. We hit into 125 to 128K and dump all the way to 70K. So that is something we need to keep in mind with a higher time frame bear divs. All right, guys, that's it for me here. I just wanted to show you guys some of this stuff. Hope this video helps you. I hope it puts it into perspective. I am talking bearishly in this video just because I want to start sending out warning signals here. But you guys, until we lose our levels, our major levels of support, we are still just ranging. We are still just following our local trends, doing our day trades as they come. And we follow the price action. We set scenarios for both macro and micro timeframes, and we trade what comes. Do not let your emotions and your bias cloud what is going to happen. You know, if you have a bias that, oh, this is only going up to 500K and we do dump, you could wreck yourself for your entire portfolio. So do not let your emotions affect the bigger things in trading, and just look at the setups in front of you. Long the setups that are proper to long, short the setups that are proper to short, and also keep into perspective the higher time frame signals that we are seeing. Okay, guys, that's it. Have a good day.